Several U.S. companies fall short of revenue predictions as well. Let's bring Doug Flynn in for the big picture view, certified financial planner and co-founder at Flynn Zito Capital Management. All right, so yeah, we did have the GDP revision. We are watching auto stocks. A quick word on the auto stocks. I want to ask you a bigger picture, like I said, about the tariffs. What do you, well, sorry, maybe I should ask a question, you know, maybe, or just assume you're going to answer, you know? I was like, I thought you were just going to pick up on it, but I said, you know what, I'll ask. Hey, Doug, what do you think of the auto stocks?
Yeah, well, not much has changed even when they were going to stop the tariffs but keep them in place for the autos. So, and whether they're on hold or they're going, basically this is how we've been living. It's on again, off again, you know, been there, done that kind of a thing. But the auto stocks, a lot of this is the pull ahead, as you mentioned. And in fact, about 80% of the companies have said, not just autos, that there has been a pull ahead of business and the consumer buying and advanced buying, whether their supplies trying to build up their inventory ahead of this. So we do have a lot of that pulling ahead. We'll see if that offsets in the later months. It's like, I often think about if you filled up your gas tank early, then maybe you don't need to fill it up next week because you already filled it up. So maybe that lowers in the next one. But if you avoided tariffs, that's a good thing. So long-term autos, you know, there's a lot of competition. It's always the kind of thing that, you know, most of them pay a good dividend because they have to. And, and they're not the greatest of earnings in terms of stocks because of the inherent costs there are involved in creating an auto.
All right, now wait for my big picture question. Here it comes. So two courts ruled against Trump, right, last night. One of them, this trade court, came out and, you know, because they appealed and they've put a stay, so the tariffs could technically stay in place. But then he's got the D.C. court, so maybe they don't stay in place. But the point is, how does the market kind of even look at all of this? I mean, it's not like it lifts much uncertainty. Maybe it even, if anything, adds to uncertainty. What do you think?
Yeah, it was interesting this morning when we woke up, the markets were rallying around the world because the thought was that Trump's tariffs were going to not go through. And then, as typically happens, this is before the reverse ruling or the appeals court ruling temporarily staying it, is that, you know, nothing's changed from yesterday to today. We're still in the same situation where what you're doing is you're looking at trade deals that can take months to a year and a half to actually put together, play out. And you're going to go back and forth. We're seeing it in front of us, where most of the times this happens behind the scenes. So it's just another day. And in the end, the market's saying, you know what, nothing really has changed. We don't really have all the clarity we need. And that is what the market's ultimately looking for. But I think it's saying we think we're going to end up getting through this one way or the other and getting on the other side so that we can move forward and look back to normal things like earnings. Is this company doing well? Is it run well? That kind of stuff.
That would be better. That would be better. Thank you, Doug. All right, we're going to run here.